Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long setup here on crude oil. Let me get my stop placed, get that down here, and then I'm looking for an up move. I really am kind of looking for this to cycle back up towards those highs. Now, the one big thing is, given that we're in a range type sentiment, I want to make sure that my stop is at least equal to my target. So if we measure that up here, that means that our target should be right here, and the highs of the move is actually a little bit further up. So that's perfect. That's exactly what we want to look for, and I'm looking to take everything off up at that high. Now, in terms of what we're looking at, and the reason why I like this move is mainly because today is, well, it's mostly a range day. We haven't really gone anywhere. We had a huge spike up in the overnight session right at the end of the day, and then we didn't really leave that, right? We've been kind of stuck in this range area. The sellers tried taking it down, and it was a relatively nice bear trend lower. You can see a very obvious bear channel working down. They got a little overzealous down here, right? They double bottom, overshoot the lows, huge blow off candle. And when they're trying to break out of a move like this, right, they break out of the swing low, they have a huge bear sentiment. If it's a breakout, it should continue, right? And the opposite happened. It didn't continue. So that tells us, wait a minute, something's wrong here, right? If this was a bear breakout and we were looking for a big run lower, the sellers should continue slamming this market, and they're actually not. They're exiting the position, causing a pop higher. So we see these sellers completely met with buying pressure. Knowing that they completely fell apart, we're going to be looking for a reason to get in. Now, arguably, you could be looking to buy down here, but it's a bit early. It's hard to kind of pinpoint that area. But when we see a multiple failure and a big push down, they trap a prior little minor swing, and they also come back to test that low again, and they find massive support. That is a really big clue on what's going on here, that we should see a continued move back up. So the entry here at 49.22, that's what I'm looking for, and we're looking for a move up to 49.42. Buyers pushing into the highs, one tick away from our target, so now we want to reduce the risk here, moving the stop up a little bit here, 49.26. Now, in terms of this upside movement, you can definitely tell they thought it a little bit, right? Buyers definitely bought into it, that we did as well. Sellers tried taking the move back, and they completely fell apart again with a very, very weak bear candle into a huge bull blow off through the highs. Now, normally, when you see that kind of move, it's kind of the same thing that happened on the bottom. You're a little bit concerned on further movement. But in this situation, after that move, it follows it up with another hugely strong bull candle, showing that the buyers, they're probably not done yet, and they're looking for a little bit more juice to the upside, and that's exactly what we got. So we get the target filled, move all the way up, beautiful fade off of the lows, albeit a little bit of a late entry. I think in this case, waiting for that better entry point, showing that the sellers are really falling apart, is a much safer way to approach this type of trap, and that allowed us to catch a beautiful move right back to the upside. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.